Me and this microphone, we're gonna have it out. All right, so today is January 3rd, 2024, and I'm gonna do a quick recap on what I did today. So we can talk about the trades I took. I took a lot of trades. Trading the futures. And again, this is a sim account, but I was trading the futures. Took like 40 trades. There we go. That is working. Took like 40 trades. I think the account was up like $800, maybe $1,000. No. It was right at $900 for the day. Then I think after like fees and that kind of a thing, it was probably $200, $300 off of that. But yeah, so I did a little bit of trading on the futures ES, and then I spent some time working on scripts for the 15-second time frame, 1-minute time frame, and the 5-minute time frame. All looking for longs. And like I said, I'm kind of long bias when it comes to coding for algorithms, but when I do the day trading part, I do trade both long and short. So here we go. This is here's Thinkorswim. That's what I use to trade the futures contracts. And you see, I took a lot of trades. You see, I took well, it says I guess 52. I don't think I took 52 today. Maybe, but because this is referencing after hours, it's showing just the last trade that I took, which was up $112. But the rest of them, I think, yeah, we got out here, and I only got out. I was anticipating that it was going to go here, and I can tell you the reason why I thought it was going to go there was because it was going to the inside of this range here, and so it did go there. But when it stalled out here, it stalled out right around 5 o'clock or so, and then it didn't do anything else until 6 o'clock for a whole hour. So I'm new to trading futures, but I don't know that it goes on a break for an hour. Maybe it does. I'm sure one of you guys can probably tell me. Let's see if we look yesterday. There's a break from 5 to 6 o'clock. Well, this started at 6 o'clock, so maybe it does. But let's do this. Let me just go ahead, because I don't do as much with Thinkorswim. I just kind of want to show you where the trades were, if you can make sense of that, right? I wish I had a different way to show you where the trades were taken. Kind of like TradeStation has a dot, and then it'll show you a dotted line that shows you that, you took profit or you got stopped out. But in any case, one thing that I have started doing, apparently on Thinkorswim, you can go over here, you can go to monitor, and when you're on a monitor, you can go to the top right corner over here, click that, and you go to export file. And so then I've only been doing this for a couple days, even though I've been sim trading for a while with it. I guess the last month or so, I've been exporting it to Excel, right? So for yesterday, for January the 2nd, I took a bunch of trades, right? And where is, I think yesterday I was up like 1,800. And this is just trading one future contract at a time, right? So I was up 1,850, and then this is the total of the commissions and miscellaneous fees, $150. So to make $1,700 for the day, I think that'd be great. Hadn't got there yet, but I'm building the confidence in some of my strategies and that kind of thing. And then a lot of that is like technical analysis, but it's just trading with the technicals. But I do use like the entries for the algos to give me more confidence, right? And then so for today, the total was $1,000, and then I had $357 in commissions and fees. So I took a lot more trades today. All right, so that's out of the way. All right, so today what I put together, I already coded for it. I mean, we can go over that here in a second, but what I want to do doing these lives or doing these doing the videos, because I'm going to do them daily, but I think what I want to do is, instead of boring you and putting you through all of the coding that I do, and I will put you through some of it, just because I'm here and you're here, but the codes that I already put together, I'll just kind of show you what they are, right? Instead of sitting with you and have you do it. Now, like I said, I'm going to sit here for a bit and do some coding, and you can kind of, you know, sit and just kind of hang out or whatever. But meanwhile, it can take a while to do this coding, so you know, you sit here and feel like paint is drying. All right, so let's go to the 15-second time frame. I tell you what, let's just do it this way. 15-second time frame. The first one that I put up was, I had this one here. I need to rename it dip. So all these are the nomenclature for it is ES. So ES 1-3-24. This is the dip. This was 15-second time frame. So I put the 15-second time frame on the chart. Zoom out. And then this is where the script gave me potential entries. And because of the volatility, because of the sporadic nature of the lower and lower and lower time frames, it's harder to pinpoint these exact reversals. But you see, got a little reversal here, got the bottom of that little pullback there. You get the bottom there, bottom here. This was just kind of like in a dip range, but still, I mean, okay. This one, not as good. Probably would have got stopped out on that one. And then that one is in a nice little dip area. So, and again, you know, with me doing intraday trading, I'm really just looking for almost like scalps, from what most people would consider to be scalps. So I'm just looking for, you know, for a move from like supply to demand, or support to resistance. I'm just looking for those small moves. All right, so that's the 15-second time frame. What I'm going to do is go ahead and put the 1 minute time frame on, and then we'll move over the script for the 1 minute time frame, which looks like this. This is one script for the 1 minute time frame. And what I'm going to do is I'm going to go over here, and I think I told you before that I typically will have different colors for the different time frame scripts, and I do that. So let's go ahead and move the 5 minute dip should be blue. I think that one is blue. The 15-second dip, that was already renamed. So how come it's not renamed on the chart, or do I have the wrong one? Anywho, that should be yellow. 15-second time frame scripts are yellow. Should be yellow. The 1 minute time frame script should be green. That should already be green. All right, and then like I said, the 5 minutes should be blue. All right, so there's the green, there's the yellow. All right, and then so again, so for the 1 minute time frame, we're looking at the yellow. Excuse me, we're looking at the green show me's. All right, so on the 1 minute time frame, which this is the 1 minute time frame, the green showed to enter here, which, you know, you have a little bit of a risk there, but it moved up nicely. This one here, not a great entry, but you're not going to win them all. And then this one here, I don't love that one either, but there was a little bit of move up from there. Obviously, you have this overhead resistance, and you got to be careful of that. So we got a nice entry down here, that green candle, boom, and then we have a nice entry here for that move up. And that's it. I mean, today was definitely a sideways day. So if you're looking to find entries trending, then you're not going to find a lot of great entries on a sideways day. Makes sense, right? Okay, now so let's move to the 5-minute time frame. Click the 5. All right, so now I'm going to add a 5-minute dip, just like that. All right, so these are the 5-minute dips where the blue dots are, blue dot. And then there's a blue dot here, but for those of you guys who were paying attention today, I was not paying attention. I was actually holding here. I did have a stop in position, but I was holding here. Didn't realize we were having news and all this good stuff. So I guess once news came out, this thing, it whoppity whopped. The cold part about it is I got stopped out here, and then where I had take profit. So wherever my risk was, I had like a stop loss here. And then I had to take profit like right here, right in here. And unfortunately, instead of going up first and then down, it went down first, stopped me out, and then went up. So I came back to the chart. I had actually stepped outside and I was talking to a contractor about something. And I came back in, realized I got stopped out. And now at that point, if I had been out here, I would have been up just 1,000 for the day and I would have been good. Which I think I was good anyway, because my goal for the day is 400. It should really be 200, but it's 400. 800 is a great day. And I came back and I missed that 1,000. And so now I'm back down here. I stopped out. So now I'm only up like 600. And so now I'm revenge trading. And I think by the time I came back in the house, I was here and I went ahead and took an entry to get in, and it went down south, and I eventually got back control of it and made the 1,000 for the day. But like I said, I was doing a lot of technical analysis trading with it. And as I get better with my strategies, I'll do some lives and I'll kind of tell you what I look for. But let's see. All right, so that's the 5-minute time frame, right? So it pulled these blue dots. So there is a little bit of a move up there. Pulled these blue dots from there. There's a move up. Got this blue dot from there. There's a move up. And showing a blue dot there. Of course, this is lower liquidity times, but maybe it'll go. I don't know. Blue dot here. This one here, like I said, I think you probably would have got stopped out on this one because, like I said, this didn't move up first. It's actually dropped first, right? So you probably would have got stopped out on this one. But these entries here look pretty good. And I think, let's see, did I? Yeah, all right, that's good. All right, so, and then the other script that I made the other day for the 5-minute time frame. So what we're gonna do is we're gonna take off the 1-minute time frame just because this is not the 1-minute time frame, this is the 5-minute time frame. Let's add, I think it is, because it's a script that actually works pretty well also. I think it's on the mess desk. All right, so this is a 5-minute script that I put together the other last week sometime. And it's been on point. And it wasn't even this one. This one has been on point quite a bit. So you see it caught the bottom there. Caught the bottom there. Caught the bottom there. Caught the bottom there. I mean, so this script has really been on point. But and one thing that you kind of come to learn about scripts and creating algorithms and that kind of thing is they can get a little sloppy over time. They can start to lose their validity. And you see here now it's not catching the bottoms anymore. Now it's kind of we're having a bunch of slippage there. So like I said, you have that older one, and then this is not my newest one. This one I created yesterday. Okay, this is the one I created yesterday with the green dot, right? And I did have this one running on my computer while I was trading today. And so, like I said, when I got the blue and then I got the green, I mean, now the green is on point for for catching those bottoms. I mean, it caught those bottoms perfectly, right? Yeah. All right. So, but this was for the day before. This was for yesterday, the 2nd. All right. And so when I applied that to today, it gave me some indication on this first one here. It gave me an indication, for a move up. Didn't get another entry signal on this one, but that one also needs to be colored blue. So that's this one. It's colored blue because it's on the 5-minute time frame. All right, this one I did not use. No, that's not is that the bear trap? Some of the times I amaze myself when I spend the time to make these scripts, and then I come back and I look at it and I'm just like, huh? I'm like, yo, this looks like, all right, so extended right. Okay, I think I know what it is. So on some of this, I was actually coding for the trend lines, which I'm going to get into today. That's kind of what I'm going to spend a little bit of time on today, is looking at trend lines and break of the trend line. So I was able to figure something out for finding the break of the trend lines. Yeah, this is the one. All right. So first, let's this isn't right. This isn't the bear drop. This is this one here. What is this? Let's go to edit studies, and that green one there is 1, 2. That's this guy. So we're gonna click on that, and then we go to edit easy language, and then it'll pull it up onto the screen. That's this one. All right, and then instead of being green, it should be blue. I'm gonna verify that, make sure everything is verified. Okay. All right, so now it moves that to blue as well. And so, ideally, I'd probably come up here and go to edit study groups, or put a bunch of, open up a fresh chart and then put a bunch of studies together, and then go to edit study groups, and you can put a bunch of studies together. So I might put all 5-minute studies together for the first week of the month. And so then I have all these 5-minute studies, and then there should be some amount of confluence, right? So where we may not catch the entry for one candle, it might pull up on from another study. And if we get a bunch of studies showing from a bunch of different studies showing in the same target area, it's probably a good idea. There's confluence there to get in, to double up your contracts. All right. So what I'm looking at here, what is that? I don't like that. Yeah. So what we went over yesterday was I think it was this bear drop that we went over yesterday. Okay. And we were just talking about drawing the trend lines, and my objective, and when you see all these little crosses here, my objective is to plot these trend lines here. And these trend lines, the condition of the trend lines is that you have to have a long bear that crosses the 15-period moving average. Long bear crosses the 15-period moving average. And I don't know if it's a swing high or not. I don't think it's a swing high. It's just a long bear. And have a subsequent long bear that also crosses the 15-period moving average. And this bear is a lower value than this bear, right? So that's how you draw your trend line. Okay, so here you have a long bear that crosses the yellow, crosses the 15-period moving average, right? That didn't help. Try to get the scaling right. All right, so here you have a bearish bar that crosses the 15-period moving average that's fairly long, but this bearish bar is lower than this bearish bar. So in essence, that trend would look like that. And we don't want an upward trend. That's not what we're looking for. We're looking for these downward trends, and then we're looking for the break of it. So today I finally was able to figure out how to get the chart to show me when a candle is above this value, right? And that's what these crosses are. So it took a little bit of work, and I spent a couple hours with it this morning. But essentially it goes something like, so we call the conditions of our trend lines. We talk about those high, those long bears that cross the 15-period moving average. This is a condition. So condition 1, all these things have to be met, right? And when that's met, then we're going to draw the trend line. We're going to extend the right side of the trend line, and we're going to make sure that the trend line persists along the chart as the chart keeps moving. Now, the trouble that I had was getting the value and using bar date time. I know I tried using bar date time. I tried a lot of things and nothing seemed to work. But for some reason, this afternoon, when I tried it again, it worked. But I had to work in this fashion. So I just say that if the trend, it has been drawn, if the trend has been drawn, right? It's not null, it's not empty. If the trend has been drawn, then we're going to begin. We're going to start this function or calculation. If the trend dot get value of the bar date and time, so this is just finding the value of that trend line. If it's less than the open of the current bar, then you're going to plot. You're going to plot on the chart. You're going to plot the low. And okay. So, I was wondering about this, and there'll probably be something else that I do for it later. But you see, there's 2 trend lines drawn, but both of them have been drawn from this one study. Okay, but so when the open gets over the trend line, it's giving you these plots. It's giving you all these plots, until, and it keeps doing it for every candle because all these candles are over the trend line until you get your second trend line. Now your second trend line is like out of here. Second trend line has not been created here yet, because here you only have 1 point, right? But by here is when you get your second point. So you still get all these show me's along here until you get this second point. Once you get this second point, now you got a new trend line. And now these values are not over this trend line. Now they're not over. Here, all these candles are over top of this trend line, so they all fire with this cross. Okay, these are not. Okay, so like I said, with that, I wanted to do some complex calculations or something and say, okay, well, if the trend line is broken with a long bullish candle with high volume, then we want to mark that candle. That's a trend break candle or something like that. So also I can use that same I can use that same idea about getting the value. I can use that same idea, and now I can say, okay, well, if through these values, because now that we have a trend line drawn, we can calculate these values. If through these values, the values are really hugging the trend line, then we want to take the break, right? But if these values are not hugging the trend line, like if the majority of these candles are down here, then we don't want to take the break, right? But if the majority of the candles are up here hugging the trend line, and that's, you know, those are like simple calculations. We can calculate that once we can calculate what the values are of these candles. So now I've got something. Now I've got something else to work with to make my scripts a lot more complex, right? So that's what I'll be working on tomorrow, and hopefully I have something interesting to show you. But one of the things that I've done with these trend lines before is, and I mean they seem to work pretty well. So let's get this out of here. I mean, because, you know, when you have a break of one trend, that's how you get another trend. I mean, that's just how you get it. So we can go here, and instead of, let's see, where is the criteria here? Condition time is great. Last calc date, so that's yesterday. And again, the 9-period moving average is between the high and the low, and the range of the candle is larger than the range of the last 7 candles. So again, we have that long bearish candle, and the bearish candle traverse that 9-period moving average. And I did the 9-period moving average, not the 15-period moving average. Then also we want to say that the wick total is less than 90% of the body. So it's not a large wicking candle, essentially. All right. Yeah, so I didn't do swing highs on this one. Let's see what it looks like on the 1-minute time frame. So we must have got something way back here. Oh yeah, this was actually from yesterday. Should have been plotting stuff from yesterday. Yeah. So see how when we change to the 1-minute time frame, now we still have these bearish candles that cross over the 9-period moving average. We got one there, and then must have another one here or so, and then it draws the trend line. And so then all you have to do is just kind of pay attention to the chart, not pay attention to the chart. Make sure that you have your parameters set right. It worked really well. It looked really well on the 5-minute time frame. On the 1-minute time frame, it looks like you could have got stopped out. But you have these 5-minute entry scripts to kind of help guide you also that this is a bottom. And then here for the 1-minute time frame, like I say again, you may have got stopped out there, but you do want to look for even as it crosses. I typically still want to look for a base. You didn't really get a base here though, right? So if you were to find a script that really crossed that very well, this just moved straight up. You didn't really get a base and then move up. So, what do you do? But here, this trend line here, you could take either one of these that was created by the script, that one or that one. Either way, you're crossing it here, and then you get a base, and then you move over, right? So, I mean, you could just use a technical analysis and enter here, and then, I mean, it just kind of hops up properly balanced. It hops up all the way to the top. So then the next thing that I need to do is create another script that also gives us a ascending support trend line. So it's like, all right, well, when you get to this range, then you need to be looking for shorts, or at least not looking for longs. So yeah, anyway, I had a lot of fun today with it, but I'll spend quite a bit more time tomorrow, like I said, really kind of honing down and seeing if we can identify some. It doesn't have to be complex. It just needs to be somewhat comprehensive. Simple is better, but if all the money were just sitting there for you to grab, everybody would have it, right? So I know that I've got to put some time into it, and these things have to be a little bit more comprehensive. Let's see, just curiosity, what it done today. So if we did last calc, last calculated date was today, then those trend lines, these here are the ones that I drew, right? So what I did to the script was made it so that it only showed up for today. And you see what it did for today, right? So if you were to use it on the 1 minute time frame, just that simple script that I put together, and it was just very basic, right? So here it would have drew the trend line right here, and you would have just waited during all this time. You would have just waited. You saw this, you said like, okay, well, I know it's probably time for entry. And then when it crossed it, nice move up. Here, you're already in a somewhat of a supply zone, right? Because it got to the bottom, it moved up. So you know you're in somewhat of a supply zone, and you know it's still in a bearish market. So you do have to be careful. But this trend line it started here, but it wasn't drawn until you got that second data point right here. Now the trend line is drawn, right? And so it was drawn here. You had to wait 1, 2, 3 bars, and then straight shot up. Here it was created. This trend line was started here. It was probably created here. You waited through this. Do you take that as an entry? I don't know. If you did, you probably got stopped out. But then you wait for this one, enter on that one, and there's a huge move up. So use your risk management, use your stop loss, and I mean, you can see just by looking at this was a super simple script, but you would have been profitable for the day. And at the end of the day, isn't that what we want? That's it. We don't want to put in a lot of work, but we want to be profitable for the day. Over here, yeah, this is the area where the news came out. So this was crazy. So I wouldn't use any of this script stuff. I wouldn't use it in here at all. But it's yeah, had a good time though. So guys, follow me next time, like, subscribe, share it with somebody. If you're interested in coding, then definitely come back with me, and we can talk about the simple stuff. We can talk about this more complex stuff. But basically what I end up doing on most of these videos, I'll code it while I'm on the screen here, and you can at least see the logic that I'm putting into these scripts, because the scripts is not what's fire. What's fire is the logic. And if you can follow the logic to a T and follow your rules, you're okay. You're set either way. But the logic is what I'm working on here. So yeah. All right, guys. I'm Eric. I am out. Unless you have any questions. Any questions? No questions. All right. I'm Eric. I'm out. Peace.